Hello, this is Steve Malone with CompsFX. I hope you're doing well today and again some good trades. Today I'm going to talk briefly about the Trader's Dynamic Index and a couple of key things to look for in the Trader's Dynamic Index. Now, for those of y'all who are unfamiliar with the Trader's Dynamic Index, it's this indicator down below. It's an indicator that I developed a few years back that helps us identify market sentiment. It's pretty simple here. When you take price action and market sentiment, when they're in alignment, going the same direction, you have a higher favorable trade. When they're moving apart from one another, it's a sign to maybe don't do anything just yet. Wait to see what the market's going to reveal and what direction the market's really going to go. Typically, I find that when market sentiment is going one direction and price is going the opposite direction, more times than not, price will eventually turn and go in the direction of sentiment. Because sentiment really is the buyers and the sellers in the marketplace. If more buyers are eventually buying, then price is going to turn and go up. When more sellers are selling or fewer buyers are buying, the market's going to eventually turn and go down. And you can see that in the Trader's Dynamic Index. Let me point this out to you. The Trader's Dynamic Index has these levels, a 68 on the high side and a 32 on the low side. These are areas of where we expect the market to become exhausted, can't seem to go any higher, though sometimes they do, depending upon the economics of the marketplace, or maybe some economic event or some announcement that took place that causes the market to continue in that direction. But more times than not, I found that the yellow line, which represents the overall market sentiment, when it reaches up around 68 or drops down here and stays right around the 32 level, look for the market to turn back towards the 50 level. So today, what I noticed when I stepped into my active trade room is I noticed that the market had a bit of divergence here. And you can note that by the green line of the Trader's Dynamic Index. So it's slightly to the downside, price slightly to the upside. And that gives us that potential of divergence. And we see the divergence carried on down. But the market was pretty choppy here, a lot of up and down action here going on. So which way is the market really going to go? Well, what I found in my years of trading with the Trader's Dynamic Index is as long as the green and the red, which represent current market sentiment, when that current market sentiment is below the market baseline, and the market baseline, the yellow line, is rolling off the 68, you just stay in that. You follow that down until the market baseline gets down around the 50 level. If you notice that we had some chopping around, but the market continued going all the way down, and it looked just about the point where you get to a low point is just about the point where it goes flat and it is around that 50 level. Go take a look at the dollar CAD. Another one that I looked at today in the trade room where it made its move to the upside, but look how low this is. And the current market sentiment turns and makes a push to the upside. As a matter of fact, it kind of made a cup and a handle type trade pattern here. We could possibly see it even go higher here as the market baseline continues rolling up. So look for these. Look for when the market baseline is way down low or way up high. We can see in the dollar yen today, another one that another trade today from my active trade room, you can see the market was way down low right here, the market baseline was, and market sentiment rolled over. When that generally occurs from a low point here, and you've got continuation to the upside in price, that is a favorable trade to take. You don't have to make trading that hard. Typically, I found when the market gets to the extremes, it gets way down low or way up high, and you see that in the market baseline, being up around 68 or down around 32, there's that opportunity to look for a trade setup as the market returns back towards the 50 level. And the market pushed on up here, but look where the market baseline is. The market baseline is up just above the 50 here, right around 56 on the CAD. We haven't started really making much progress yet, but if the market comes down and tests this and it holds, then we'll see the market baseline push on up here. Again, what we're looking at is the difference in sentiment compared to price action. Oftentimes, more times than not, should I say, the market price will follow the market sentiment, the marketplace. Well, folks, this is Steve Malone with CompsFX. Just look for that market baseline being way up high or being way down low Wait for the setup of the green and red to continue going in the direction where price is going, and look for that opportunity to step in and to make that trade off these lows or off the highs you see in the Traders Dynamic Index. Well, y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.